Hello, everybody. Welcome to Pluxee's webinar again. I'm sure you have come to us with many webinars like this. This is another financial webinar, and I'm really excited. And on behalf of Pluxee, I'd like to introduce you to Mr. Smith Shah, founder of Money Matters. Smith has been committed to decoding financial markets spanning equity and credit through engaging webinars for over a decade. He's the founder of Money Matters, and he owns this boutique investment firm that offers tailored based goal driven solutions to individuals, corporates, HNIs. So he has great and vast experience in the matter that he is going to speak to you about today, and I really hope that it benefits each one of you, and you take a lot out of today's webinar. With that, Smith, I welcome you, and I hand over the session to you. Thank you so much.
Thank you. Thank you so much, Shruti. And okay, so are we waiting for someone or we can go ahead?
You can proceed. You can proceed now.
Okay. So good afternoon, everyone, and thanks, Shruti, for having me here. And it's a privilege to conduct such sessions and multiple organizations. So just to give you a quick introduction, I'm a founder of Money Mentors. I've academically done CFA. I've cleared all the 3 levels of CFA. And in my previous jobs, I have worked across several MNCs like Guggenheim Partners, where I was taking care of equity research. And then I joined Citibank as a credit research head. And finally, in 2020, thanks to COVID, it was like a blessing in disguise, where we started and I founded Money Mentors. So during the COVID era, where I saw a lot of people struggling with finances, right, and I always thought there was a big gap with what bankers or financial advisors were pitching to the clients and what they actually needed. Right? So I thought this is a big gap, which probably is a good opportunity for us, and that is how Money Mentors came into picture. So yeah, moving ahead, we have a vision at our firm that we try to provide financial freedom to 1,000+ families. Okay? And what financial freedom is, it covers a lot of things. It is not only about having a good corpus. At the same time, it's more about peace of mind. You should have a good sleep at the night. That is a big part of financial freedom. So we are working towards it. And let's start with the topic for today. Okay. So I know we have been covering a lot of financial awareness programs across. So in financial planning, I personally believe there are 4 major parameters which one should take care of. Okay. So they are insurance planning, investment planning, retirement planning, and tax planning. Obviously, being salaried, tax planning becomes an important aspect. Apart from that, insurance and investment, everyone would agree to. There is a lot of questions that why retirement planning is that important, specifically for employees who are at a very young age. That retirement ka abhi se kyun sochna hai? It's 30 years far. Why should we plan? But guys, trust me, retirement is something where no banks give you loan. Okay. Retirement is something where आप आपके सगे भाई से भी पैसा मांगने जाओगे ना, he'll have a question mark, right? And that is the reason retirement planning is very important. Okay, Shruti, are you there?
Yes.
I think there are some. Are you in a position to hear me? Because there are few participants who say that the voice is not.
I can hear that. I can see that. Actually, there is the sound is slightly low. Smith, I think maybe you can try switching the audio between the device, and then probably let's check with everyone if you're clearer. I can hear you clearly though.
Okay, got it. Just a second. Is it better now?
Can anyone in the chat please let us know if it's clearer, better now? Yeah, I think it is clear. I'm getting people say. Can everyone just say yes, or you
I see messages coming in as yes. Okay, and Shruti, I think many of them have asked to continue session in Hindi. Is that okay?
Actually, the thing is that there will be a lot of people from different parts of the country. So I wouldn't suggest that, but
Okay,
it can
perfect.
always be a mix. Yeah.
I will try to have a combination of both. Yeah.
Yes, yes, please.
Okay.
Thank
So
you.
moving ahead, uh, retirement planning, as I said, is very important because at a very young age, if you start planning for retirement, the life is very easy. Retirement is the only goal where banks will never give you a loan. And as I said, you go to your best of your friends or your siblings, your real brother sister. Probably they will be in a doubt if you need some money at 61. Okay. So let's try to cover the very basics first. So how does a financial pyramid look? Okay. So at the very base, you see there are two important things: risks and emergencies. Okay. This is the base or a foundation which anyone has to take care of. We generally see people moving directly to dreams and legacy. Okay, legacy is a very later stage thing. Dreams is something where most of us will focus, but before that, risk and emergencies are the most integral part of financial planning, which a lot of us tend to skip. Okay, so like in a building a structure, if the base is strong, then you don't have to worry, right? If the foundation is not strong, then there's something need of concern, right? So let's try to figure out the risk part first. So for me, in risk, there are two important things: health insurance and life insurance, right? So we'll try to cover both of these aspects in the next 10 minutes, and I will give you live examples on how can you reduce your premium. At the same time, what is the cover which one should look at. So can I get quickly some answers on how much is the health insurance you feel is sufficient for your family? Someone says 20 lakhs, 50 lakhs, okay. 1 CR, yes. Okay, 10 lakhs as well. So honestly, in Mumbai, I personally believe at least we should have a cover of 25 lakhs. But what if I give you a suggestion that there is no incremental cost if you want to increase your cover till 1 CR as well, right? Everyone would like to have that 1 CR cover, right? So we'll discuss on how you can save on your premium but still have a 1 CR cover. Thank you guys. Thank you for your answers. Someone says in Metro City it should be 20 to 25 lakhs. I absolutely agree. And the inflation, medical inflation is 15%. Yes, very much true. Okay. So what I will give you, what we'll discuss over here is health insurance, kitna hona chahiye, and how can we save the premiums. So as you all are working in some of the other corporates, I'm sure you guys must be having some health cover from organizations. A lot of my clients say, if I'm covered from my office, why should I take a separate cover for myself? My question to that person is, at what age are you planning to retire? At 45, 50, 55? What if after 50 or 55, when you're retired, and that is the time when you need the insurance the most, but unfortunately, we have developed some symptoms of blood pressure, diabetes, or maybe some other extreme situations as well. And at 55, when you go to buy a new health insurance, that company rejects basis your current medicals. So it becomes very difficult to buy a fresh plan at the age of 55, 60. So one should definitely have a base policy at a younger age, right? One of the key reasons is also we tend to switch, right? Every 2, 3, 5 years, we switch companies. In my current organization, I have a cover of 10 lakhs. But in my next organization, the cover is only 5 lakhs. What then? There are a lot of ifs and buts. So I personally believe we should have a self-cover, self-independent, not to be relied on organization. Whatever organization gives is a bonus, right? Now I'm giving you in the screen, I'm showing you two examples. Okay. This is my case study. If me and my wife will go to buy a 10 lakhs ka health insurance, this is one of the best policy right now in the industry. If me and my wife will go to buy a 10 lakhs health insurance policy, it will cost you 18,174 for a year. Okay. Now a lot of clients say, I already have cover from my organization, so I'm not willing to pay so much of premium. So there's a concept which we call as deductible. Okay. So on this in the second screenshot, can you see 10 lakh rupees with the premium of 10,528? Over there, we have 1 lakh rupees deductible. What is a deductible? Say for example, I have a 10 lakh rupees ka cover and my hospital bill is 5 lakhs. I go to the medical company, the insurance company, and I claim the 5 lakhs. But if I have a 1 lakh deductible, I go to that company says first 1 lakh rupees I will not pay. I am not responsible to pay the first 1 lakh. The next 4 lakhs I will pay. And that is how deductible is programmed to reduce the premium. So because that 1 lakh ka risk is taken by the client, the premium is just 10,528. So because you guys have a cover from organization, you can take a 1 lakh deductible or a 2 lakh deductible. If you take a 2 lakh deductible, the premium goes further down to 7,000-8,000. So buy a base policy of health insurance of 10 lakhs and have some deductible which will help you save. So this is about the 10 lakh cover. And if you see the third illustration, it is about a top up. How many of you are aware about top up? Are you guys aware about what is a top up health policy? Few of them are saying they are aware. Good. So in top up policy, I can increase my cover at a very cheap or a very low premium. So in this case study, I have a 10 lakh rupees ka cover. By the way, this 10 lakh rupees ka premium is for a 31-year-old husband and wife. Both of them are covered. It's a family floater. Okay. In top up, I want to take a cover of 90 lakhs, whereas the deductible is 10 lakhs. Meaning first 10 lakhs will not be paid by a top up policy, but I did not worry because I have a base policy to cover the first 10 lakhs. So if I want to increase my cover, I buy a top up of 90 lakhs at a premium of just 1,284. So rounding off in 20,000, me and my wife are covered for 1 year. Generally, a lot of people will not say about top up policies or about deductible because let's understand guys, as a banker, as a financial advisor or as an insurance agent, my commissions depend on what is the premium which you guys pay. Hence, we generally in this fraternity, we have seen a lot of mis-selling happening where people don't talk about top ups and deductibles. So to save the premiums, this is one of the best thing to do, which is to buy a top up policy. So we have covered 3 elements when it comes to health insurance. One is the base policy, why one should buy a health policy, even if the organization is covering that. Then we also discussed about how we can save on premiums if we have some cover from organization at a base policy level as well. And lastly, about the top up, how we can increase the cover by buying the top up, which helps us to increase the cover but with a very minimal incremental premiums. Shruti, is the voice clear?
It's clear. For me, it's clear. I think.
Perfect. So guys, whoever has some voice issues, maybe it's a possibility that, we have some network issue at individual level. So please try and check your network as well. Someone is asking a very good question that any plans which clubs your parents as well in the policy. Generally in health insurance policy, we have 2 adults and child. So in case you have 2 childs and 2 parents as well, then it becomes difficult. But in that case, there's a concept called multi-individual policy where we can club everyone from the family and we get specific discounts for covering it under one insurance company. So maximum 2 adults plus childs can be covered. If you want to add your parents, you can add it via multi-individual policies. Top-up premiums and health premiums will change as per your age. Yes. Okay. However, the policy which I am showing right now, right, lot of good features has come in. So this policy has a feature wherein till the time you don't claim, irrespective of your increase in age, your premiums won't increase. We'll not go into the depth of features because I can speak for 2 hours when it comes to features. So let's stick to the basics, and obviously you guys can get in touch if you want to know about the detailed part, and we can cover it sometime, hopefully next time as well, the details of a health insurance. Okay guys, so moving ahead, the next part is life insurance. In life insurance, as a financial advisor, I will always advise one should only focus on term plans. We should not mix investments and insurances. Never mix investments and insurance. Always try to keep insurance and investment separate. And term insurance policy is the best insurance policy because that will have a huge cover at a very low premium. Now the question is, किसका insurance, life insurance लेना चाहिए? Most of the times I see only male members taking the policies. Do I need to take an insurance policy for female members or my wife? That depends. So the answer is, if you are using the salary part to run the house, जिनका भी सैलरी यूज कर रहे हैं टू रन द हाउस, उनका इंश्योरेंस पॉलिसी होना चाहिए. Okay, so say for example, I run my house and my office expenses as well. I take care of it. Right now, I'm not dependent on my wife, but I'm sure in future when I plan my family, probably for my kids, their education expenses and so on, I might have to take some help from my wife. So if I know that I can take some help in future, it's better to take a policy right now, because in life insurance, at the age you enter, the premium freezes. So if today my insurance cover policy has a premium of 15,491 as showed in the screen, it remains 15,491 for all the years of my coverage. So the earlier I take, the better it is, and hence I would prefer you guys buying policies for all the members in the family जिनका भी पैसा घर पे यूज हो रहा है. If something happens to my wife after 15 years, can I ask my kids that I think, sorry guys, now we need to change the school because we have lost one of the earning members? Practically not possible. So if I'm dependent on her, her policy should be there, irrespective of a male or a female. Now the bigger question is, till what age should I buy? Okay, till what age should I buy? Most of the times I have seen my clients buying till the age of 85, 90, 95. Why? Because हमको ये पसंद नहीं है कि मैं प्रीमियम्स भरूं एंड अगर मुझे वो एज तक कुछ नहीं हुआ तो मेरा प्रीमियम्स चला गया. How can my money go? We can't accept it. And hence I have given you illustrations. This illustration is for a 1 CR cover for a 31-year age male. For a 1 CR cover, the premium is 15,491 till the age of 60. If I want a cover till the age of 60. If I want to take a cover till the age of 85, the premium is 25,000 odd. Okay, so I'm paying 10,000 extra every year. Yes, if something happens to me at the age of 61, in the first case study, my family will not get anything. But guys, trust me that 10,000 rupees a year, if you save for the next 40 years, that investment value itself will be more than 1 CR. So have a cover only till the age of 60. One more reason why we have to buy only till 60 is my substitute. Why I'm buying a health insurance? Why I'm buying a life insurance? To create my substitute. If something happens to me, my family should get some amount so that they can take care of themselves. At the age of 61, I am financially free, I am retired. Human value of mine is zero because I'm not earning. So why one should have a term policy or an insurance policy? मुझे टाइम ही नहीं मिला कमा के छोड़ के जाने का. And that is where a term policy comes into picture. If I live till 61, I will make sure I earn sufficient and I save sufficient so that my retirement life is easy. Only in the cases where you don't get an opportunity to earn and save for your family is where a term plan comes into picture. If I'm living till 60, I will make sure I earn sufficient and save sufficient. But if something happens to me at the age of 35, I don't get an opportunity to earn enough and keep it for my family. So at the age of 61, you don't need a cover because you are retired. But make sure then the investment planning part, which we'll discuss in the next 5-10 minutes, is very much sorted so that you don't have to worry about the premium or the corpus at the age of 61. So my recommendation is always buy a term policy. The premiums are much cheaper. At the same time, buy only till the age of 60 or 65 max. You don't need till 85, 90. You end up spending more premiums. Might as well save the difference amount, invest in a good investment alternative, and you will make a lot more than once a year. So I see a lot of questions. Is ULIP a good investment or not? If one has a term plan till 75, 70 years, can we extend? In most of the cases, once you buy it, you cannot extend. However, different companies come up with different features. You can check, but yes, obviously the premium increases. ULIPs for me is not a good option because in ULIP, if you invest 50,000 rupees, or let's take an example of 1 lakh, easy to understand. If you invest 1 lakh rupees, of which 8 to 9,000 straight away goes for your premium, and the investment amount is only 91, 92,000, and the premium which they charge is relatively high. And in a 1 lakh premium, you get only 10x or 15x cover, which is 10 lakhs or 15 lakhs. So the cover is not sufficient. I need at least a crore or 2 crore to safeguard my family. So in ULIPs, the cover is less. At the same time, the charges are high because in ULIPs there are two charges. One which we call as mortality charges, and second we take the investment charges. Because they are managing your investments, they charge you for that as well. So charges are double. So what we should do is, rather than outsourcing it via ULIP, you take care of your insurance separately by yourself and take care of your investment separately by yourself. You save on a lot of charges. So to conclude, term plan is the best insurance policy. Why? Because it is the cheapest and has the highest cover, and if possible, always buy till the age of 60 and 65. And yes, a lot of people are asking, can we get life insurance at the age of 40, 45? Yes, till 40, 45 you get till 60 as well. But after 45, I will not recommend a term plan because the prices will increase significantly. So till the age of 42, 43 or max 45, it is okay, but not after 45. After 45, go for other plans like ULIPs or savings plan or endowment plans. Take term plans as early as possible. So just to give you guys an example, when I was 24, I took one term plan of 1 CR. I paid a premium of 12,500, which I'm paying year on year. And I thought 1 CR is a very less cover. So in 2019, I bought one more policy of 1 CR. That premium is 18,000. So for the first policy, I'm paying 12,500 every year. But for the second policy, I'm paying 18,500 every year. So because I delayed by a few years, I'm paying a higher premium every year. So jitna jaldi buy kar sakte, it helps us. Okay. Someone asked, what if I bought the term insurance plan, but after my demise, they refuse to pay the insurance amount to family? Generally, it never happens that way. We have a regulatory organization, we have courts, we have ombudsmen, where we can fight if we are right. But if we are doing some illegal activities and we are caught, like say for example drink and drive, in that case obviously the cover will not be given. Also, if you guys hide something while buying the policy, and if the insurance company gets to know that you had hidden some important details of your health, they can reject the policy. So when you buy the policy, please never hide anything. If you smoke, mention that you smoke. If you drink, mention that you drink. Because guys, let's understand, the agenda is, if something happens to me, my family should be safeguarded. But if we give false information, that whole purpose goes for a toss. Yes, so we have covered two important elements. Moving back, the first element is risk. So to safeguard, we have to take care of two things: insurances, life and health insurance, which are the most important element, which we call as risk cover. These are the two important risks which we need to cover, right? So we always talk about investments. Why? Because we are interested in increasing our money. So I always say, पहले पैसा बचाना है, फिर पैसा बढ़ाना है. Because if you do a heavy investment, okay, but you don't have any health insurance, any life insurance, one hospitalization and all your 15-20 year savings are gone. it takes just a second to wipe off all your 15-20 year savings. So guys, please understand life and health insurance are the most important parameters before you start your investment journey. Please make sure these are ticked off before you move to the other elements. Now we move on to the very important aspect of emergency funds. Okay, a lot of time it happens we don't have emergency funds, a separate emergency corpus, and then we end up breaking our investments if there is a health emergency. So a lot of people will ask, I have a health insurance, so why do I need an emergency fund? There are cases where you don't get a cashless claim. So initially you have to pay the bill and then you have to take the reimbursement. So at that time we need emergency funds. Also, it is not only about health insurance. Maybe you need some emergency corpus for your house, for your family. The reasons can be n number of reasons can be thousands of reasons we can have. So emergency funds is not only from health perspective but for other reasons as well. A good example is COVID. A lot of us lost our jobs or businesses were shut, or we had our jobs intact but salary was in a delay. So at such cases, emergency funds come into picture. So what is the right equation? I personally believe whatever your monthly expenses are there, add your EMIs and rent as well. 6 months into my monthly expenses plus EMIs plus rent has to be there as emergency funds. Why? If I lose my job today, for the next 6 months, I'm not worried on how will I run my house. Rather, how can I can focus on improving my CV and improving my network so that I can get back to job. But if I don't have this emergency funds, I'm so worried. I'm not thinking on how can I get back to job. Rather, I'm worried about how will I run my house. Likewise for business as well. And as I said, for medical, obviously we need emergency fund. So as a thumb rule, 6 months into monthly expenses. These days, a lot of clients have 12 months into monthly expenses as well. It is obviously good to have more, but a minimum threshold, 6 months. In case you have a lot of senior members at your house, the probabilities of health, health emergencies are more. Have a higher emergency fund. And please make a note, don't be over leveraged. If I earn 100 rupees, I should not have EMIs of more than 30 to 35 rupees. It creates a lot of problems. So again, as a thumb rule, out of the 100 rupees what I earn, 30 to 35 can go for my EMIs, 30 to 35 can be my day-to-day expenses, and the remaining 30 can be my investments. If you are fortunate, you don't have any EMIs, very good. You are very lucky. Spend 50 rupees, but invest 50 rupees so that in future also there is no need to take any loans. So save higher. Yeah. So I think we have covered the first, the important part, which is risks and emergencies part. We'll now move on to the dreams part on how can one plan their investments. Okay, so one has a very good question: in which mode we need to keep the emergency fund? A very valid and a very nice question. Thank you for asking this. Emergency funds has to be in your bank saving account, which you don't touch, or else at FDs. That money has to be very liquid. A lot of clients of mine during COVID said we had emergency funds, but we had invested in the stock market. During COVID, I require those emergency funds, but the markets are down by 40%. The whole purpose has gone for a toss. Emergency funds has to be parked in a very safe asset. That investment cannot be volatile and it has to be liquid. If I click a button, I should get the money at least in the next 24 hours. So emergency funds has to be very liquid and cannot be in a risky asset. Maybe in banks, saving accounts, FDs, or else nowadays we have liquid funds is the concept in mutual funds. So approach your financial advisor before taking these decisions, right? But make sure you have insurance and emergency funds in place. Okay, so moving on, we need to discuss about investments. Where should one invest? Okay, so what I need from all of you is, the very important thing is you need to first figure out why do you want to invest. The why has to be very clear. Just to give you example, I stay in Mumbai, okay, and I want to travel to Delhi. I know I have to travel upwards. If I want to travel to Kerala, I know I have to travel downwards. Okay. If I don't know where I have to go, how do I decide whether I have to go up or down? So if I don't know the goal, how will I know how much is sufficient and whatever I'm doing is right or wrong? So as I say, goals will decide your time horizon, and your time horizon will decide your product or the asset class. No products or asset class are good or bad. At times FD is also good. At times mutual fund is also good, or equity is also good. So as a product, we need to define the time horizon. I will try to give you this. I will try to give you this example with a live case study. Okay, but before that, let's understand the wealth creation journey in the last 40 years. A lot of us might be saying that our parents used to always invest in FDs, because at that time, in 1980s, the interest rate on FDs was 15%, right? But today it is 7%. So in those days, I used to get 15% on my FDs, and my inflation was only 3 to 4%, right? So my real rate of return was 11-12%. My actual returns minus inflation rate, that is my real rate of return. So real rate of return was 10 to 11% without taking any risk. So क्यों हम कोई और asset में डाले जब 10-11% मिल रहा है FD में? But right now FD का rate is 7% and inflation is 7%. So you are technically not getting any real rate of return, and if I consider tax, it's a negative return. Real estate in 1980, 1000 rupees per square foot at the very highest expensive area, South Mumbai, 1000 rupees per square feet in 1980s. Today it is 1,50,000 rupees per square feet. That means it has grown by 150 times. Gold in 1980 was 1300 to be precise, but let's assume a round figure of 1000. In 2024, it is 80,000. It has grown by 80 times. Sensex in 1982 was 100 rupees. Today it is 80,000. It has grown by 800 times. What I'm trying to say is, in the long run, equities are the best way to generate returns. But I'm not saying FD is wrong or a bad product, or real estate is wrong or a bad product, or gold is a wrong or a bad product. It depends on what are your goals, when will you need money, and depending on that, you need to select a product. If I need money after 1 year, I cannot invest in equities. I have to park that money in FDs, because the risk parameter in equities is high, but I need that money after 1 year. What if markets are down after 1 year? So only for the long-term investments, stick to equities. Rest of the things we need to take care by different other investment avenues. Okay, so before that, let's understand one thing, why we always say the earlier you start, the better it is. Okay, in this example, let's assume I'm at 30 years of age, and at 60 I want 1 CR. So I have 30 years in my hand. Okay, if I have 30 years in my hand, if I generate a 7% rate of return, I have to contribute 8,500 every month to generate 1 CR after 30 years. If I invest in a product which generates 9%, I have to invest 5,850 rupees every month. After 30 years, I will reach at 1 CR. If I have a product which generates 15% returns, I have to invest just 1,780 rupees per month to reach at 1 CR after 30 years. If I, chill or think that investments to baad mein karenge, and at the age of 35, I realize now I only have 25 years of retirement left. So if you see at the very right bottom in this screen, from 1,780, it increases to 3,083. That means if I would have started the investments 5 years back, I only invest 1,780 per month to reach the same 1 CR at the age of 60. At the age of 35, I have to contribute 3,083. At the age of 40, I have to contribute 7,540 to reach the same 1 CR after 20 years. What I'm trying to show is, the earlier you start, the better it is. The moment we delay, the monthly contribution increases. Okay, and why does that happen? Because of power of compounding. Power of compounding is 8th wonder of world for us in finance. We can discuss power of compounding in depth maybe later on, but let me move to the most important part of goal planning. Okay, so this is a live case study of one of my client. She's 34 years old. I onboarded her in 2024. Okay, Can you see the Excel, guys? If Shruti, can you give me a heads up? Can you see the Excel? Okay, perfect. I think you guys can see. Okay, so Rutuja, who is 34-year-old, okay, and has a monthly expense of 1,05,500. Now let's understand what are the goals which she has. Okay, her first primary goal is she has a daughter, 2.5-year-old. So we generally pass out 10th standard in the age of 15 and 12th standard in the age of 17. So probably after 17 is where higher education kicks in, right? So she's 2.5-year-old. Round figure, after 14 years, her higher education is due. Now today, if we go for a higher education, the cost is 20 lakhs to 40 lakhs depending on what kind of course we are doing and in which country we are. In education, we have a 10% inflation rate. So the same course which today we can do in 20 to 40 lakhs will cost her approximately 1.5 crore after 14 years. So one goal is to generate 1.5 crore after 14 years. So guys, just to make you understand, this 1.5 crore is not a random figure, but it's a logical figure. Next goal is Savi's marriage, the daughter's marriage. She's 2.5-year-old, assuming she gets married 27, 28. After 25 years, she wants 1 crore. Now this 1 crore is a random figure. Okay. She's 34-year-old. If you can see over here, she's 34-year-old and her expenses are 1,05,000. Okay. So she says that I want to retire at the age of 50, 50. So considering the inflation of 7%, okay, considering the inflation of 7%, what will be the expense at 50? 3,10,000. Okay, assuming the same standard of living. So now what I did is, she has a retirement goal where we did some back calculations that if she has 6 CR after 16 years, she can generate 3 lakh rupees every month easily, even if she keeps that money in FDs. So that is how we sorted this retirement goal. And then she has a lot of other goals. Home loan. She wants to clear up her home loan before retirement. So here in 2039, we clear out our home loan. Why? Because after retirement, I don't want any liabilities. At that time, her outstanding home loan is 30 lakhs. So she wants 30 lakhs to clear the home loan. Then she has brother-in-law's marriage after 5 years, so approximately 8 lakhs at that time. She wants 1 lakh every year for holiday travel. She needs 1 lakh every year for her daughter's current education, not the higher education. She wants emergency funds of 5 lakhs separately. So these are her goals. So what I've done is I've accumulated the amounts required and the tenure. Depending on tenure, I will select the product. So if you guys see over here the returns, in the long-term goals, the returns are higher because I will invest in equities. But for some investments where the goal is every year, the returns are just 6 to 7% because I cannot take risk. I have to invest it in FDs and RDs and so on. So hence I'm considering just 6% returns. And then basis this, I back calculate what is the monthly contribution I need to do. Then not necessarily I can invest 1 lakh rupees a month. In this case, she has to invest 1 lakh to fulfill all her goals. So what I do then is I mark these goals as primary and secondary. And first I will try to take care of primary goals and then I will move to secondary goals. If there is a compromise at any point of time, I will have to skip my secondary. Right? And I will always focus on my primary goals first. So this is how in general one can plan. How many of us have this plan ready? How many of us has this plan ready? So my first request to all of us is, let's try and set this goal. And figure out what goals are. What we do is on YouTube, we see some video and we instantly take action and we invest in equities or in whatever things we need. My point is, as a product, equities, mutual funds or any other product, all are good. That can be decided basis what my goals are. So we need to first plan out our goals and then we have a system in place where we tag that investment to that goal so that we can know after 2 years, after 5 years, will I reach that goal? We have a lot of technology and device and calculators which can show us whether I will reach there or not. If you can't reach to your goal, then you can plan that, okay, I cannot reach at my goal. I need to increase my investments. Can I increase that? Yes or no? If the answer is no, can I compromise something at a later stage? Just to give you an example, someone wants 1 CR after 10 years to buy a house. because the markets are down thanks to Israel-Iran war, Russia-Ukraine war, COVID, etc., etc., I see that I will be reaching only at 80 lakhs after 10 years. What I can take a call is, I wanted to buy a 2 BHK. Am I okay with 1 BHK? Or say, for example, I wanted to buy it at South Bombay. Am I okay moving towards the north? If yes, I continue with whatever it is. If no, okay, I was investing 20,000 rupees, but because markets are not doing well, right now let's invest 24,000. If I can increase by 4,000. What happens is it gives me clarity on what I want to achieve. Or else after 8 or 9 years, when I come back to my client saying, sorry, we can only generate 80 lakhs, market was not doing well. At last minute, how do I produce that 20 extra lakhs? So planning is very important. Plan your goals, rest all can be managed, right? So this is a general way of planning. And then once this plan is ready, we tend to move towards which product to select, whether I should go for mutual funds, equity mutual fund, debt mutual fund, liquid funds or FDs, gold, bonds, debt products, all will be decided basis your goals and the tenure. What is the period after which my goal is due? That will decide your goal and the product you select. So one is please start as early as possible. Now one more thing which I wanted to show last 2-3 minutes, and then I will be opening for Q&A. One very important thing which I wanted to show is a lot of people say I can only invest 1,000, 2,000, 3,000. मेरे इतने से investment में क्या ही हो जाएगा, right? So this is one example where for one of my mentor's client, my mentor is 73-year-old. So my mentor's client, उनका live case study है. His client started investments on 8th of October 1995. Okay, and he started with just a 1,000 rupees investment per month. And I think after a few years, he forgot that he was investing this 1,000. It was auto debiting from his bank, and he continued investing this. On 27 June 2022, he gave a call to my mentor that, you know what, my grandson is getting married and I want funds, etc., etc. And can you check what the value is? Now, this guy has invested 1,000 rupees for 27 years, 321 months. For total investment is 3,21,000. And the end value on 27th June was 1,19,58,000. This number looks very wow, but guys, let's understand it's for 27 years patience. How many of us has that patience? So in the long run, equities always give you better returns, and even a small contribution today will lead to something big in future. So don't wait to start after 4 years, 5 years, 10 years. जब मैं अच्छा कमाऊंगा तब start करूंगा. Start as early as possible and see the magic after few years, right? So impact of small SIP is huge. Please start investing. Don't wait that only bigger investments can be made. Even a small investment can lead you to something big, right? So as I said, start early. Let's take this example of Mr. Early and Mr. Late. Mr. Early starts his investment at the age of 25. He invests 10,000 rupees a month. And he invests for 35 years till the age of 60, till his retirement. So he has invested 42 lakhs and his investment value is 11.41 CR. Mr. Late starts at 45 years, but he realizes he is late and hence he doubles his contribution. He invests 20,000 rupees a month for the next 15 years. He has invested 36 lakhs. His value at 60 is 1.23 CR. Whereas the guy who started early, his value is 11.41 CR. It is only because he has started early. The returns are almost same in both the cases. Because, so returns assumed in both the cases are 15%. But because one of them started early, his journey was very easy and the corpus is huge. At the same time, Mr. Late has a very lower corpus. Later on during Q&A, if time permits, I will show the calculator as well, how that calculation works, what is power of compounding. And finally, this slide is for all the salaried guys. A lot of you are confused whether you should go for an old regime or new regime, right? So on the left hand side, it is the income level. Please try to find your income level where you are. Your income is up to 5 lakhs, 6 lakhs, 7 lakhs, 8 lakhs, and so on, and 15.5 lakhs and above. Okay. We all know there are a lot of deductions and benefits which we get. ATC, ATD, HRA. If you have home loan, then there are benefits for that as well, right? So if your deductions and benefits are more than, so let's take an example of 15 lakhs. If my salary is 15 lakhs, I should have these deductions of 4 lakh 8,000. 4,08,333 to be very precise. If I have my ATC, ATD plus my home loans plus some other benefits under the tax sections is more than 4,08,000, I will prefer an old regime. I will save on tax. If it is less than 4,08,333, I will prefer a new regime. A lot of you are asking if we can get this presentation, etc. Definitely, I will share with the concerned team and then they can pass it across. So this slide also I will share so that you can have this in detail. A lot of you guys, if you are from your laptops and screens, in the meanwhile, you can take the screenshot as well. Okay, moving ahead, I open the forum for Q&A, and if time permits, I will just quickly show a calculator as well. So I would like to open it with a note that if you do not find a way for money to work for you while you sleep, you will work until you die. I repeat, if you do not find a way for money to work for you while you sleep, you will work until you die. So the conclusion is start making your money work for you. So I think, yeah, that is it from my side. We'll move to the Q&A part. Shruti, can we, with the, thank you so much.
Yeah. Whatever questions you may have, you can add in the chat section. Actually, there are many questions already, and I think Smith has been answering simultaneously all the questions. Smith, we have about 15 minutes for the session to end. So I think we can take a good 4 to 5 questions because you have, you've already answered multiple questions I've been going through the chat. So whichever you deem fit, good 4 questions, you can select and definitely answer.
Sure. Okay. So one of the questions which I see is, if I started smoking, drinking after taking the life insurance policy, should I call and inform them, or do I just have to be truthful at the time of taking the insurance plan? A very nice and valid question. Thank you, Sumit Verma, for this question. Yes, if you are right. So ideally, what insurance guys expect from us is, when you buy the policy, you have to disclose all the facts. After 5 years, 10 years, 15 years, 20 years, whatever you do, ideally they are not interested, right? But it's always advisable, whatever changes are there in your life, inform them at the renewals. So whenever you renew your policy, inform that this is the change in my lifestyle. And there is no change in premiums when you disclose it after buying the policy. When you buy the policy, if you disclose that you are smoker or drinker, not drinker, but specifically smoker, the premium will rise. But later on, if you start, it is good to disclose. At the same time, there are no extra premiums which you have to pay. A lot of you have asked questions on LIC and ULIP plans, that in insurance, are those the better plans? I don't want to judge or comment whether they are good or bad. Every policy, as I said, is good or bad depending on our goals and our risk-taking capacity. But generally, the policies which LIC has, apart from term plan, are all endowment and savings plan, where the returns are just 6.5–7%. So then don't mix it with insurance and investments. It is just a 6.5–7% product. At the same time, it gives you cover. But again, the cover will be very minimal. If you pay a 1 lakh rupee premium per year in LIC, in a saving or endowment plan, the cover will be 15 to 20 lakhs maximum. Is 15 to 20 lakhs sufficient for my family? That call one has to take. Likewise, the same in ULIPs as well. Okay, one very valid and very nice question is where to look for financial advisors and how to choose trustworthy ones. Very valid, very nice question. What I will recommend is, if you have any family friend, one of your friend who is investing with an advisor since a long period of time, okay, or if you are investing, if you have someone in your family who is an advisor himself, because of the relationship which you have with them. You can trust them, right? Start that journey with them, monitor it for the first 1, 2, 3, 4 years, have a check on it, and probably then you can take a call whether this person was a is a good advisor or not. Obviously, at the day one you cannot judge, but I will give you one example. A lot of my clients, okay, which I get now, are all on the basis of word of mouth. So, say for example, you are my client, you have taken my service for 2, 3 years, you are happy with it, and then probably you recommend me to your friend circle or family circle, and that is how we acquire clients. So it all happens on word of mouth. To try to speak to your friends and family. Are you investing? With whom are you investing? How long are you investing? Is he a good guy? Is he trustworthy? And I think you will find a good advisor definitely. I don't think it's a tough task to find a good advisor. I understand the pain at times, but it's a process. It will happen. Okay, someone has asked a very nice question. Mayur Gala, thank you so much for the question. Do we have term policy in which premium paid gets returned back at the end of maturity period? Yes, there is something called as return of premium, in which whatever premiums you pay, in our example, let's take an example of 60. Okay, here the premiums are 15,491 till the age of 60. If nothing happens to me, whatever premiums I have paid, excluding GST, comes back to me. But when you add that return of premium as a rider, you have to pay some extra premium. And then extra premium will be significant. It will be 7-8,000 per year. Rather, I say take that 7-8,000 and invest it somewhere. Because once you invest it, you will get the same corpus after 25-30 years. In fact, more than that. And again, you have a liquidity and flexibility. If you need that investment value after 5 years, 10 years, 15 years to buy a house, car, or XYZ, you can use that funds. So never take a return of premium option is what I will suggest. But again, that call is on individual basis. As a financial advisor, I will suggest never buy a return of premium option. But having said this, as a financial advisor, I would want you to buy return of premium. Why? Because if your premium increases, my commission increases. And hence, advisor always pitch for this. And as a client, we always say yes to this because we like it. मेरा पैसा जाएगा नहीं, उनको वापस मिलेगा. But if you do the max, it's a lost deal. So never buy a return of premium. Shruti, in the meanwhile, if you can also find some good questions, let me know.
Sure. Yeah.
Okay, one good question from Mr. Nayak is it good to buy directly online from company or Policy Bazaar? Which one is safer? I would always prefer, not because I'm in this industry, I'm a financial advisor. A disclaimer, I myself am a financial advisor, but still, whatever I'm saying is, please don't buy insurance policies directly from the companies or from Policy Bazaar or online portals. I will give you a live example as well. Okay. One of my client bought the policy online. He's my friend, so he's investing and not an insurance client for me, but he had that insurance policy there. Now let's assume something happens to me. Okay, I have an insurance policy, health insurance policy. I was driving a car, I met with an accident, I'm in hospital. I have bought this policy online. Is my family capable of completing all the procedures? Will the company or the Policy Bazaar or whoever the online portals are, will they come to help you guys or your family? Whereas a financial advisor will step into your house. It is his duty to do that. That is why we get commissions, right? Or हम extra करते क्या? So I will recommend insurance in a very important aspect. Please buy it via someone who you trust and who will help you. Because if something happens to me, my family needs me. Say for example, I am no more. I have a term plan. I am no more in this world. And my wife or someone has to claim that. I am not here. I will not help her. She has to take care of all the things. Already they are not in a mental state. They have had a huge loss in their family. They are not in a process or in a frame of mind to do all the paperwork. At that time, do you want your family to do all the paperwork, to run at the insurance companies 8 to 10 times, to have that extra burden and stress, despite they having a huge loss in their family. So it's all about, I will again repeat, whatever we have discussed today, make sure how you can make your life easy, peace of mind. As I said at the very start, financial freedom is not only about money, it is also about how you can have a peace of mind, how you can relax, how you can have a good sleep. So these are few things where you need to take care. You should have someone who will take care of such things. Shruti, any questions which you have in the meanwhile?
We have 5 minutes left, Smith. I've just put one. I'm not sure if you've taken this question on
Yeah,
gold,
yeah,
uh, just because all the questions were on
yeah,
markets
yeah.
and stuff like that. So I thought that we should take a contrast question also on how
Sure.
gold is performing.
Yeah. So can you repeat the question? How gold is performing?
So the question that's been asked here is, I'll tell you the person asking. This is Perumal asking.
Yeah,
Is gold performing the market? Now, I'm assuming that the question comes because the markets are down.
yeah,
So I'm that's where I think the intention is.
yeah. So okay, guys, one need to understand where we prefer golds. When do I give gold to my client? If the client is a big investor who has already invested a lot in equities, then gold is good from diversification perspective. Or if my client has a daughter who he expects to get married in future after 15 20 years, I know like in Hindu tradition we give a lot of gold during marriage, right? So if that's the case, from diversification it is good. At the same time, accumulating smaller gold chunks year on year helps me during the marriage, so then it's good. But if you ask from returns perspective, gold ka returns will be 10%. What happens is gold will run in 2 years. So historically, what we have seen is from 30,000 to 50,000, it took 2 years. Then it was again at 50,000 for the next 3 years. Right now, I remember precisely Jan 22, gold was at 60,000. Jan 22 to next 2 years, it is at 80,000. Again, probably for the next 2 years, it will go silent. So during war periods and instability, gold will rise. At that time, markets will not do well. Rest of the time, markets will do well. So returns wise, gold will give you 9 to 10% per annum. Equities will give you 14-15% per annum. If you are okay with 9 to 10%, 100% gold is a good revenue. At the same time, from diversification perspective, out of my 100 rupee, 10 rupees should definitely go to gold. 100% is from diversification. And if we have future liability of gold, example marriage, where I have to give gold, then start accumulating, because then your price is getting averaged. If my daughter gets married after 20 years, at that time the price of gold might be 2 lakhs. But I'm buying every year at 80,000, 85,000, 90,000, and so on. So my average price is 1 lakh, 1 lakh 20 versus after 20 years at 2 lakhs. I hope that answers the question. Yeah. Okay, guys, one quick thing, Shruti, last 1 minute.
Yes.
A lot of questions on what should we do for the bonus. We are receiving a good chunk of bonus this Diwali. What needs to be done? My answer to that is 30% of that money, maja karo. Spend 30%, right? That is where Diwali comes into picture. Remaining 70%, of which 20% park it in emergency fund, okay, or else keep it somewhere where you can invest at later periods when the markets are down. And the rest 50% needs to be taken care basis goals. What are your goals? See where your deficit is there. Say for example, I have a goal of buying house after 5 years, but I'm not planned for it because of deficit. I don't have that much money. Park that money in that goal. So 50% goes to goals, 20% to emergency, and 30%, yes, you can spend.
Thank you so much, Smith. I think we're almost at the end of the time where we're hitting 4 o'clock, and I'm sure everyone is waiting to go back because Diwali is around the corner, and wishing everyone a happy Diwali as well. Thank you so much for your insightful, session. I truly enjoyed it. It's been wonderful for us to listen to, and I'm hoping that all all our consumers also benefited largely from whatever we heard through your session today.
Yeah.
We hope to do a session again soon. And we're very very glad that we could have you come for this session so close to Diwali. We are very thankful for you to
Pleasure,
accepting this
pleasure.
session as
Pleasure is
well.
all mine.
Great, great. So happy Diwali, everybody, and I hope that you have a wonderful Diwali, and you're able to make the most of all your bonuses that you get from your employer, and Smith has been able to help you make a wiser decision with your money. Thank you so much, Smith, again, and hope
Thank
to
you
see
so
you
much,
again with
Shruti. Thank you so
Pluxee.
much, all the attendees. It was a pleasure, and see you guys soon. Happy Diwali, Happy New Year. Thank you. Bye.
Thank you. Bye bye.